Okay, so what we're going to do is start here where on the right is the Nasdaq, which I'll be trading. On the left is the S&P 500. It's ES1 for the S&P 500 futures account. And what I'm doing is I'm letting it drop into this 1 hour fair value gap. You can see it denoted there, 1HFVG. And I'll explain more about those, but you can see it dropping into there. And so after it drops in there, I'll be watching for the candle closures, how the hourly is lining up, how the 4 hours lining up, because there's certain things I'm looking for. The biggest thing I'm looking for is and you can see actually on the right, these green and gray candles. That's a vision with a widget that shows the hourly candle, and then the red candle over here is these candles here are the 5-minute candles. So what I'm looking for is for the 5 minute to form a 5-minute gap, and I'll denote that when it happens. And I'm kind of looking for the hourly to finish back up above 17,009, which would be above the wick of the candle, the hourly candle right before it. So that green candle on the right and the gray candle, I want the gray candle to come up and close right there. That will be very significant that we go back up and hit the high of day. And I actually, I feel like there's a bigger target than that. So we just let this play out. We want it to go ahead and hit this hourly gap and then pop back up. And I'm looking at the ES because that's in the support. And it's not unusual for them to overshoot the support a little bit and then go back up. So now we're just strictly looking at the NQ Nasdaq futures. And this is actually MNQ1. It pays $2 a point. Or you lose $2 a point. So we'll see what happens here. So right now I'm looking at what looks to be the 4 hour candle, and it had a big huge wick down below it. We want the 4 hour candle. It actually needs to close in this area. So I'll be looking at the time of day and stuff of that nature to be sure everything plays in part. So we're still probably looking at about 8:35, 8:40 maybe in the morning. And once this gets started, go in the direction we want, it won't take long. So I'm just waiting for these candles to finish, and what I'm looking for now in my terminology is a green sprout. I'm wanting to start seeing some green instead of this big red right here. The reason I keep an eye on the S&P 500 is because they correlate. The two correlate, and they sometimes move in tandem. One may bottom before the other, which gives clues, but I'm just sort of keeping an eye, making sure that neither market is just falling totally apart. And as I said, it's not unusual to go slightly down below, but this particular candle right here, in my mind, I'm really wanting it to close back above that hour, or not below the hour, in other words, not below the hourly gap that was created. It's filled the gap in, that's okay, but I want it to close back above it. So these are the hourly, this is the main candle, the 5 minute. So we're getting to the time of day now that I would want to see some sprouts of greens. What I'm doing right there is I'm marking the bottom of that previous hourly candle, kind of showing where I want it to close above that little gray line there. So we're just waiting here. And then it's going to get exciting, I promise you. The cool thing about it is this kind of stuff happens almost every day, but it really happens a lot on Mondays and a lot on big news days. There's no news today, so it could be a little bit slower. But I'm starting to see what I want, which is a little bit of sprout right here. I call it a little green sprout. So now I want to just I want this thing to just keep moving up and actually create a 5-minute fair value gap. Okay, this is looking nice. And you can tell the hourly over here, the gray is coming back up where I want it. It's looking more and more like it could finish inside that little the green candle over there. All these big candles on the right are the hourly. So I'm focused now on the 5-minute, and as we move toward 9 o'clock, getting close to 9 o'clock, I want to see this 5-minute gap go here, and then that will confirm our entry. We do not have it yet. It's beginning to form, but this candle that we're on now has to close. So I want it to close and leave this gap open. This 5-minute candle. So now I've got what I want. That candle's coming to a close. And I'm just lining up 3 contracts. So we'll be looking at $6 a point. And we'll put it in here and we'll move up, move our target up, move our stop down below this. So right now it's sort of a 1-to-1 trade, but it's going to be much more than that when we get through it. So what we're risking is about $793. And we wouldn't risk that actually, because if I seen this candle, I should not see a candle come back down here. If I see a candle start to come back down to that gap that I drawed out, then we're going to close the trade out for maybe $100, $200 loss. But I do not expect that to happen based on time and price right now. So with these 3 contracts, what I would want to do is, as we get into this this negative 5-minute gap up here, and also those highs just above it, I'd be closing 2 of those contracts out for a nice profit and locking in those profits so that it's going to be a great trade regardless. But my bias is that we're going a good piece up to a 4-hour gap that is somewhere around 1,000 points above us, to be honest with you. Right at 1,000 from here, close to it. 1,000 Nasdaq points, which is pretty good. $2 a point, it would be great. So we'll see if that plays out. You would not be watching the video if it didn't play out. Well, you would, because at this point you'd definitely be watching it. So we got 3 contracts. I'm trying to keep an eye on the price right here and divide it by 3 and then multiply that by 2. And that'll give us what profit we've locked in. I'm thinking we can lock in close to $500 right here. But if we make it up to these highs, when we make it up to these highs up here, that's where I'll be locking it in. So the 3 will then go to 1 contract. So we're getting a good push now. It's exactly what I want. And this is that same candle. So this is what we call a breakaway gap, exactly what we want. So I'm going to push my main target up to where my bias is, which is up here at this 4-hour fair value gap. I'll explain more about fair value gaps, but the premise is that that's a huge gap and it's attracting price up there. And a lot of information about those. And some people, they can fail sometimes. That's why you have stops. But that's where I believe it's going. So we're looking at 800. So those highs, those equal highs right there. We're getting into that negative gap that I was talking about. So now I'm checking out my hourly and my 4-hour candle, seeing how everything's looking as we move toward 9 o'clock here. Getting really close to 9 o'clock. So I'm seeing a total of about $800. So if you divide that by 3, well, we won't have to divide it by 3 because when we see what's left, then I can double that and tell you what kind of profit we've locked in. So we're around the 800 mark. So now the 900 mark, and we're creating this huge gap now. The negative, you can see the negative 5 minute, slowing it down a little bit, but not much. We do not want this to close its gap. We want this big gap to stay open. So as long as it stays open, we're going. And I was just checking out the SPY prices here real quick. Just to correlate everything. So we're pushing up right at $1,000 right now. Now's when I should be taking the 2 off. Right here, we'll take 2 contracts off. And once I see that happen, we can tell how much profit we're locking in here. We're going to sell 2. Not sell, actually buy back, but anyway, we sold 2, so it left 380 times, about 380, so 380 times 2, $740 profit locked in. Now we just have 1 contract running, and so we'll be moving our stop up so that it can't, we don't want to take this money away from us. We're not going to allow it to take it away from us. Moving our stop up so we can't lose the money that we've made at all, and a lot of this money that's been accumulating here just even on this 1 contract. So the time now is getting close to 9, and a little after 9, we're going to want to see a really sharp move up. Take out the high and then keep going. The high is the high from this morning, overnight. And we're really early on this time because I expect it to be closer to 9:40, but we're only about 9 o'clock, which tells me we have a really good shot of going up to our big target. We'll just keep trailing the stop along and making sure we lock in as much profit as possible. We're going right up here. So the hourly really is looking good because it's doing what I call an inside and up. A very powerful move usually follows that. So now we're just going to be easing along candle by candle, making sure we lock in as much profit as possible if this thing decides to turn and fall. But my expectation is that we go to our target. Which, if we're in at 16,797, so we're getting close to 1,200 points here. Which should put us right at pretty close to $2,500 plus the $700 we locked in, about $3,100 here. So the white line that is, well, I'll show it to you here. I gotta pull this down. The white line that you see right here, that's actually the gap where it closed Friday and then opened today, or last night sometime. The futures market opened at 5 p.m. Central Time last night. So we're moving up to close the gap. And then this is getting very close to 9 p.m., 9 a.m. Central Time. So at 9 a.m. we're moving in to close the gap. And then over the next 10 minutes, I'd want to see it 10 to 15. We'll say next 15 minutes. By 9:15 a.m. I want to see it take that high out. Just because at 9:30 you sort of change to another session time. The New York session times comes to an end, and then you move to a different session. So I'm moving my stop up now, making sure we lock in as much profit as possible. So right now we're sitting at about $700 profit on this one contract. That's about 350 points above where we started. And I'll keep moving it up, and as the time comes on, I'll move it up even closer because I do not want to give up this profit that we've made. So right now, I would be giving up roughly half of the profit that was made, but I feel really good because of what time it is, how far we've come, that we maintain these gaps. So I'll move my stop down just below where this gap starts, and just keep a close eye on this candle, see how it works out. And preferably this candle actually just turns right back up. Either the next candle or this one just rolls right back up green. I think this is the 9 o'clock or 9:05 candle right here. Let's see, this candle's almost over, so I almost moved my stop, and I may move it to the bottom of that candle, but I'm thinking we're going to be okay right here where our stop is. And I'm thinking we get a continuation on up. I'm just sort of looking at the structure and the different, you can see the gaps as they just keep flowing. Those gaps are very, very important. So we just want this gap here not to close at all. I've got my stop there. If I were to get stopped out here and we went down into that gap, started back up, I'd reload, just put another, just start another contract, but I'm just not going to let them get too far below $300 of this on this one contract, because you get 300 plus the 700 maybe, that's $1,000. I'm looking at gaps that are above us, and I'm looking at that was on the 4-hour chart. And this is just all very calm, very methodical. It's more of an if this, then that scenario. I mean, certain things have to happen in order to for everything to work. So now we're getting what's called an inside candle, and it's creating the inside up, and we're getting to that area now where we're very close to the 10, the 8 minutes to 10 minutes after 9, and then this should be where we start to see another huge push to the top. And as we make that push, you'll see me following up with the stop very closely. We don't want to, it's just we're reaching a point moving toward 9:30 that this could turn down, and we do not want to lose what we've built here. So this is a beautiful trade. It's working out perfect. And if we get to the spot that I'm thinking about, which I feel very confident right now in reaching that 4-hour fair value gap target, the very bottom of it, I feel very good about it. If we reach that, this should get us up to about $2,400-$2,500 on the one contract. The other two contracts we closed out early, roughly $700, so looking at about $3,100. And the market does not move this way all of the time. We've just had a lot of down days, in fact down weeks, and so this is what we would call a relief bounce. And you have to be one of the reasons I keep hovering over that stop is because I don't want to, I want to maintain as much of this money that we've built so far. So we do not expect to come below this area that I'm pointing at, this green area right here. This is the line of last defense. I mean, this is an area we want to stay. It's a gap that we do not want to see closed. In fact, now we want to see in this next candle, we want to see it start to move up and away in a very high rate of speed. We want to see some big candles come up out of here. That's what we're anticipating now with the gaps, the time of day, the structure that we've seen built. We expect to go up to that area up there. We expect to do it rather quickly. Well, before 9:30, and we're looking at about 9:05 right now, or 9:08. I'm sorry, 9:08. So this is the 9:10 candle that will be finishing. So after this candle finishes, I would expect to see a massive move upward toward our target. We filled the gap, and it's time to go up here. And you can see how much it projects on there, about 24.48, something like that. So 24.50 plus 7, nice trade, very nice trade. I think I put by 11 a.m. We're so far ahead of schedule. That would be the latest that it would go there, but we're so far ahead of schedule right now that I do not expect it to take that long. That was the estimation, but I mean, time-wise, we're way ahead of schedule right here. The train is ahead of schedule. So at this point, if I have a candle finish below that last red candle, that would be where we would close the trade. Take the $400 or $500 and be done with it. But I do not expect that to happen. I expect now to start seeing some big movement upward. Toward our target. We had this target since early this morning. I mean, looking at it, it's like, okay, if we're able to come back out of this, we should go up, take out the high of day overnight, and get really close, if not into that 4-hour fair value gap. So we're starting to add up some money here now. So you'll see me start to move the stop up the trade and start trailing this thing much closer. And I'm just denoting these gaps as it goes. You can see it starting to pick up some pace here, pick up some momentum with force. That's what I want to see right there. That's beautiful. I'm looking at what the cost of an option would have been had I got it, and you could have sold the option for about $800 right here. But we're not doing options, we're doing futures. So let's move our stop on up, protect this money. Wherever my stop is right here, it doesn't really matter, because I am going to cut this thing off if I start seeing any negativity that I feel like threatens taking in our money, because we're up over $1,300, $1,400 right here. And keep in mind, this trade is you're probably looking at a 30 to 45 minute trade. 1,600 now, moving my stop up, starting to trail it really close, a little bit closer. Locking in as much of this profit as possible. We're not going to let them take it. I don't expect them to take it. I expect them to go to the target. And that is the expectation. With a candle like this, we are going to that target. Four-hour fair value gap up here. It probably will reject from there, but I'm going to be done for the day when I hit this. So we're looking at $1,700, almost $1,800 now on one contract. 1,000-point move on the Nasdaq. Just ease this right on up right here. I just took a picture of it so I could keep it. So here we are, pushing up toward over $2,000 right here on one contract, plus the $700 we made earlier, $2,700, and we're going to ease up here, and it's going to pause. I can just feel it in my bones. This candle's fixing to end, and when it does, it'll be a little bit of a pause. before it finally crashes through this target. And 11 a.m. is not even applying anymore. We're so far ahead of schedule right now. And the market will do this when it gets in a hurry. You see, I moved the stop up here to try to protect as much as possible. There's that pause right there. So that's that little bit of pause right there before they crash right through it. So I feel very comfortable. We created a huge gap right here. So we should maintain at least half of that gap, probably the top 25%, not go any deeper than that, and then just crash through this thing. You can see the gap, I'm marking it out right there. So let's see this thing crash right on through and we'll finish this thing up. $2,448 plus $700 from earlier. Total video time about an hour. So about a $3,100 trade altogether this morning between 8:30, 8:45 until about 9:15. So 30 to 45 minute trade right here altogether. That video time is incorrect because I actually cut out some of the waiting time that you didn't need to be bothered with. So there we go, 2448 plus 700-ish, $3,150, somewhere in that neighborhood. And we are done, D-O-N-E, for the day. Done for the day. Thank you very much for watching. I hope this helps to understand the value of fair value gaps and the value of time. Very important.